Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. Today we have Scott Crone. Scott is the founder and managing partner of Codo Management Group. Codo Management focuses on undervalued warehouse spaces with a strategy of converting it into climate-controlled self-storage. Scott, thank you so much for joining us on the show, and how you doing, my friend?
I'm doing well. Thanks for having us, Dwaine. I appreciate the opportunity.
Absolutely. Really looking forward to it. As you know, we talk a lot about different strategies, different asset classes on the show. Mainly a lot of it focuses around multifamily, but you guys focus on a particular niche of self-storage. I know your background as an architect and different things. So you're very educated and have a lot of different expertise. But would you mind kind of going over your background and kind of what your focus and what makes you guys a little bit different?
Absolutely. I appreciate it. So I began in real estate when I was getting my master's in architecture. And I was fortunate enough that I was the TA for a professor who owned a real estate development company that also did architecture and construction management and contracting. And they did it in the multi-family sphere. So my master's thesis was a 400 unit development that was like $100 million in revenue. And so I worked on that with him for 6 years, 3 while I was in school. Plus I was also working for him when I was not actually in class. And then 3 years as a full-time employee. But then I also did condo conversions. We did converting apartments into condominiums, and we did a couple single family homes, as well as I did 2 other condominium complexes during that period of time.
Wow. Yeah, not a lot of people get that kind of, hands-on type of experience like you did. So it's very fortunate you were able to kind of touch and feel it and kind of get that education alongside of it. So that's, very good for you. And as far as kind of your transition, because I know that you could have did, multifamily, could have did other things. What kind of drawn you to self-storage? And then can you kind of talk about the opportunities that exist today?
We did do multifamily. In fact, we did both new construction as well as we bought existing apartments during the recession of 08, 09. And, but we've also done single family. So we've progressed, but a lot of the change has been in response to the economy. So the different markets within the economy has dictated what we're able to do. And I think that's an important fact within real estate is, when someone goes into real estate, they think that the market's always just going to be there, but that's not always the case. There's these huge ebbs and flows, especially in the residential side. And it was in 13 that I was introduced to a customer who was a client of ours who we were coaching on real estate as a concept, but they were trying to find distressed self-storage, and we just couldn't find it. For 2 years we looked. It was prior to 13. We began in 11. And I told them, I said, in real estate, the biggest way to make money is through development. So if you're looking to get into self-storage, then perhaps development's the way to do that. And so that's how we got into self-storage. And I began seeing that this product is a lot more demographically driven. It is a lot more predictable. There's a real spending pattern and habits that are associated with it. So in that sense, it's easier to predict and model than single family or definitely multifamily.
And with that said, what's kind of like your criteria? I know you had mentioned like, demographics and different markets. What's kind of like a focus for you guys? Can you kind of go over kind of like your general, investment criteria?
Well, what we're doing is we're combining self-storage and development. So we are looking for underutilized commercial buildings in urban settings and then converting them into self-storage. And so for us, we're looking to have a Class A assets at the end. So we're looking for buildings that are between 80 and 100,000 square feet that are zoned for storage or have the communities that are willing to allow it to be zoned for storage. But then we also have to have the right demographics. And that is based upon a 3 and 5 mile radius. So if we don't have the criteria that we're looking for within the demographics of that community, then it doesn't matter how great the building is, it doesn't matter what the zoning is, it doesn't matter how cheap the building is, we just won't go into that market.
Mm. And as far as kind of like your strategy you had mentioned earlier on the call about, finding value and things like that, what are kind of some things that you guys look? I know obviously development, is a huge part of it, but is any particular thing you had mentioned in the intro before as far as climate access and things like that? Is that like a big thing? And then what are type of, I would say, tenants that are typically looking for those types of spaces?
In the urban markets, the Class A's are all fully climate controlled and with the ability of driving into the asset. So in each and every one of our buildings, you can literally drive into the building. The garage door comes down. You can pop the trunk, keep the doors open, unload your vehicle, your car, your truck, your van, whatever it may be, and then move your stuff to your locker individually inside. So you're dry, safe, and secure. And that's the biggest thing that we're focusing on within Class A type facilities, is that they're all climate controlled and fully conditioned.
And as far as kind of like the tenants, is it, more kind of you're getting like government tenants that have like documents, or people like with like, documents that are things that they need to have climate, controlled and things like that?
Typically, it's about 50% businesses and about 50% residential. So on the business side, it could be part of the supply chain, or vendors who just need to keep their equipment or something like that. If it's an electrician, extra parts, conduit, switches, whatever it may be, outlets that they're using that they don't have the ability to store. And then on the residential side, if people are moving into the city, or if they can't afford a bigger apartment, and a self-storage locker is an economically, feasible alternative than getting a bigger apartment and having to move. So if I can rent a 5x5 closet, or if I can rent a 5x10 closet, then it's a lot better for them than having to move and relocate.
Can you kind of talk about, as we move into, I know we have a couple weeks heading into 2021. I know with everyone's kind of trying to guesstimate where the market's going to be, especially on the residential side. Can you talk about the opportunities heading through? I know overall self-storage has been pretty resilient throughout many different market cycles. Can you kind of give what your thought is where we're going to do and where we're going to head into heading into the new year?
Well, this may anger about 50% of your listeners. So, and 50% may agree with me, but what I'm saying is based upon analysis rather than emotion. And if you do have emotion, there's nothing wrong with that. But I'm just saying I'm looking at this from purely an economic analysis, and you may or may not agree with it. But I think we're going to be headed towards a downturn, and I think the markets are already beginning to say that. I originally said that if Trump was going to win the election, it was going to be based upon the economy. And if there wasn't the confidence in the economy, then he was going to lose. And it looks like it's going towards Biden. So I think people are preparing for a recession. And you might say, well, that's crazy because he's going to have all these stimulus plans and this and that and all that sort of stuff. But I'm looking at what big dollars are doing. Okay. And in the last recession, there were major moves within the economy. And I'm talking about billion-dollar acquisitions or billion-dollar movements. And historically, self-storage has thrived in recessions. And so in compared to other real estate asset classes, it has gone down like a point or two over the last 4 recessions and then bounced back. So even when we were facing a recession this year, we had 1 quarter of downward turn, and that was because of March. Every self-storage facility operator and owner that we knew did not lose any occupancy. In fact, they gained. We just opened up a facility the week before the Illinois governor shut down the state. And once we got past the initial couple of weeks where it was completely tight lockdown, we've gone from 0 occupancy to 35% occupancy in 6 months. So from an occupancy point of view, we've exceeded our first year projections in 6 months. So the other big thing I'm seeing is Blackstone. In the last recession, Blackstone made major movements, and they started buying distressed notes in massive things, massive states, like with the CMBs. They bought them in Florida, they bought them in Arizona, Nevada, I believe. And then what they were going after was the homes, but more importantly, they were then going for the loans once they got flipped and turned. Last week and a half ago, it was just announced by the Wall Street Journal that Blackstone is acquiring $1.4 billion worth of self-storage facilities, which is on par with what happened in the last recession, which was when Extra Space jumped from like 10th in the size in terms of self-storage REITs to number 1 because they bought over $1 billion worth of facilities. So what I'm seeing is the bigger players. Banks are tightening up, banks are constricting. The market there's a lot of volatility within the marketplace. And then you see the big movement of Blackstone's not going to make $1 billion investment without really thinking about it. And there's some really smart people there. So when I see these factors lining up, it's sort of like the keystones in the last major recessions that I saw. when it was the internet bubble, or when I saw the housing stock bubble, or the, those different things. People began talking about these things 3 to 6 months beforehand, before it really tanked. And then when it did tank, everyone was acting like it was a big surprise. But like when Greenspan was talking about the internet bubble or the housing bubble, that's when I stopped buying. That's when we began selling. That's when we began looking at different things and how to position ourselves in better ways. And it's the same thing that I see happening here. So, I'm not trying to make it an election comment, but I'm saying this is what I see is how the market is responding to things that are occurring right now based upon the election. Does that make sense?
Oh yeah, absolutely. And I actually read that Blackstone article, and I've been talking to a lot of different investors, and they've been saying the same thing. And you're starting to see a lot of the sentiments there. Like if you kind of dig into the research a lot, so I know that you guys are very experienced in looking at the numbers, looking at the data, historical data, in order to make educated decisions up front. So definitely appreciate you sharing that with our listeners. As far as kind of like I know that you guys are looking at, kind of the stress area. So are you as of you seen data right now that you guys are able to take advantage of some stuff now, or is it going to be kind of waiting until stuff's starting to change and then those opportunities starting to exist, or is this kind of like a deal by deal basis?
Well, a couple of years ago, about 3 years ago, we started on a 5-year plan, and that was to have 10 new facilities within 5 years. And to that extent, a recession doesn't impact us. So because in fact, it increases our buying power. And that's not, what I'm also seeing is that existing self-storage facilities are trading at really low cap rates. So like a Class B facility is trading at a 6 or 7 cap, and being marketed at a 6 or 7 cap when it should be like an 8 or 9. And so people are trying to be, taking advantage of this type of situation. So for us, we're not going after those products. We're specifically going after, products that are not self-storage and converting them. So we just closed on a facility in Louisville, Kentucky yesterday. So we bought 144,000 square feet of building. We have existing tenants, and we're going to move them all into one half of the building. And then we're going to have 55,000 net rentable square feet of self-storage lockers in the other half of the building. And so we're going to be working on that conversion for the next year and a half.
Wow. It's good. Very good news. I'll definitely get your contact information so we can share with our listeners, so they can, talk to you and get more information about your company. But I always have a section of the podcast so everyone kind of get a little bit know more about the guests. But can you kind of talk about what's like a typical workday for you? And do you have any special morning routines?
I do. And I appreciate you asking, because to me, that's part of the most important part of the day is the morning. Every morning I wake up at 5:30, and my wife and I and our dog, we go for a walk along the beach. And up until, this week, this weekend was the last weekend I did it. We finally pulled the paddleboard off the Lake Michigan.
Oh,
but
nice.
We paddleboard, 6-7 months of the year. And so for us, it's about solitude and silence. So we might walk and we might talk about something for 45 minutes, or we might not say anything. And it's a mind of just allowing us to absorb the beauty of the day, especially when you see this beautiful sunrise coming up and you're out on the water and it's peaceful and silent, but it allows your mind the ability just to relax. So we're coming off this sleep and you're totally relaxed. And then rather than just jumping right into the day, you have this moment to reflect and just to have this quietness so that your mind, your heart can speak to you. And so for us, that's an important part of our routine. And, so I'm usually, heading to work around 7:30, at work around between 8 and 8:15. And, I'll work until when I need to get my stuff done. So that might be 5, that might be 6, it might be 7, depending on what it is. But family is also really important to us. And so, 2 of our kids are in college. Our son just left this year for college. But before that, we invested heavily in our kids. We continue to invest heavily in them. And if that means we wanted them to learn what it was like to succeed, and then also importantly, how to fail, and then how to overcome that failure. Because I think as an entrepreneur, that's a very important lesson. Everyone, in this day and age, and again, this might really tick off some of your listeners, but everyone believes in a participation trophy. Mm-hmm. Our kids learn to say, like, I don't want a participation trophy. If I get a trophy, it's because I've earned it. I've won it. I don't want something that everybody gets. And it's not to say that that's bad, but we've raised them in such a way that they can appreciate hard work and working diligently to pursue something over a long period of time to know what that success feels like. I think in today's day and age, people expect success to come easily.
Mm-hmm.
And it's not. It's something that, it can, but if you're going to have endurance, if you're going to have an ability to thrive over a long period of time, it's going to take hard work.
I totally agree with that. Absolutely. And thanks for sharing that. And I noticed you had mentioned, family and your wife is like a big intricate of your life and of course towards your success. I would assume that's what that many will say you're most grateful for, but is there
Yes.
anything else to add to the list?
Well, I mean, family is ultimately, I'm very grateful for that. I'm grateful for the faith that I have. And, the fact that the two go hand in hand. I'm also grateful to see our kids succeeding when I say succeeding, that they're beginning to do things in their adult lives that they're eager and excited to pursue. And it's not what I want. It's not what I thought that they would want. It's, them in the process of discovering and what resonates in their hearts in terms of excites them. And that's exciting to see as well. So I'm thankful for those.
Absolutely. I know that, like I said, this is a very hot topic. And like I said, a lot of stuff you're saying is very interesting. And I totally agree with, like I said, there's a lot of shift in there. Everyone have to look at shifting their strategy. So I encourage everyone to at least have a discussion. How do we get in contact with you to further or get more information about your company so people can learn more?
Well, Dwayne, thank you for that. First of all, what I'd like to offer your listeners is that if someone has a site or thinks that they have a building that might be worthwhile or interesting for self-storage, if they email us at info@codamg.com, that's info@codamg.com, or if you go to codamg.com, you can find the link there too. If they reference you or the show, we'll set up a free 1-hour call for them to go through it and tell them what is good or what is bad about the site and if it's worth pursuing or not, or if they come across a listing for a self-storage facility, what to look out for, any of those things. I mean, this industry is too small. We're not looking to steal anyone's deal. If they want us to sign a non-circumvent, non-compete, we'd be more than happy to do that. But that's just our giving back to you and your community if we can do that for you guys. But those are the different ways in which people can reach us.
Absolutely. I really appreciate that. Scott, it was really a pleasure to speak with you. Thank you for the insight and kind of like your market knowledge and your expertise, and hope to all continue success to you. And like I said, all blessed to you and your family, and look forward to connecting with again soon.
Thank you very much.
All right. Take care, my friend.